February was an unusual month for the real estate market in Guelph, Cambridge, Kitchener, and Waterloo regions. Typically, what we'll see is a big jump in the number of sales from January to February, but that didn't happen this year. In fact, if we look at this February, it was the lowest amount of sales that we've had for the month of February in over a decade, and that was across all three regions. We did see a slight increase from January to February, but not close to what would be normal levels. Guelph had 120 sales, so up 17% from January, but down 47% from last year. KW had 223 sales, up 11.5% month over month, but down almost 28% year over year. Cambridge had 101 sales, so that was up 11% from January, down 18% from last February. With such a dramatic drop in sales, you would expect that our prices would have started to soften as well. However, that hasn't been the case. We've seen prices hold steady right across the board. Guelph had an average sale price of $775,000. That was flat from January and down just slightly, 2.2% from last year. KW had an average sale price of $749,000. That was up 1.89% from January and up 1.35% from last year. Cambridge had an average sale price of $719,000. So that was down slightly, 3.25% from last month and 1.5% from last year. This shows that sellers aren't feeling the pressure to lower prices and that buyers are still willing to pay for well-appointed homes. Now, if we look at the absorption rate, which basically compares the total amount of new listings to come to market compared to what sold that month, all three of the markets did soften. Guelph's absorption rate dropped to 44%, so 44% of the new inventory sold within a month compared to 65% this time last year. Kitchener-Waterloo's absorption rate was down to 38%, so that's down from 60% this time last year. Cambridge had an absorption rate of 46% last month, so that's down from 63% last year. This means that we're currently building inventory in all three markets, which is fairly normal. Now, when you're building inventory, you would anticipate that your average days on market would be increasing as well. But this market is full of contradictions. The average days on market from January to February fell dramatically in all three marketplaces. Now, this doesn't mean that everything is selling, but it does mean that the homes that are selling faster. What we've noticed is the houses that are priced well and that show nicely tend to be selling within a few weeks, especially the freehold homes under that $1 million price point. Overall, we're in a lower volume market, which is primarily due to lack of consumer confidence, but prices are holding strong and the in-demand homes are still selling very quickly. With rates coming down, it's increasing affordability, and this is a very comfortable market right now for somebody who's looking to both buy and sell. It's a great opportunity for first-time buyers to enter into the market, as well as for investors. We're seeing cash flow right now that's way higher than what we've experienced for a very long time. As Warren Buffett always says, be greedy when there's fear in the market and fearful when everyone else is greedy. Well, that holds very true to this current market. It's an excellent time to enter into the market or pick up your next investment property.